What's up everybody? Nate here. So the United States has gone through some pretty massive changes over the last 20 or 30 years. From bangs to the internet to more recently, the Great Resignation and working from home, the US has seen a lot. But nothing has changed more over the past 20 or 30 years than our shopping habits. I mean, the US used to go exclusively to malls or local stores to buy everything. But over the past 10 years or so, that has completely changed. Every single year we have seen more malls go out of business in the United States. Okay, sorry Gen Z, so a mall is... I'm just kidding, but you guys do know what a mall is, right? Now, malls were huge in the United States, but now all of a sudden we're starting to see some big box retailers go out of business. Huge names over the past couple of years have pretty much faded into obscurity, from Sears to JCPenney and now Kohls. Kohls recently announced that it has received several buyout offers to completely change out and rebrand its company. And this comes after months, if not years, of struggling from the traditional retailer. Now, Kohls isn't some small retail store. It has well over 1,000 locations all throughout the United States, and it currently employs around 120,000 employees. But as fewer and fewer people turn to those traditional shopping locations, Kohls and other retailers are pretty much going away for good. And it looks like this trend is only going to get worse and worse in the United States as more people choose to shop online than brick and mortar locations. And I think the last 2 years have had a lot to do with that. So today I want to talk all about what is going on with Kohls right now and how this is not just an isolated issue. This could actually be leading us to a bigger trend in the industry as a whole. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. And now let's talk all about Kohls, traditional retailers, and what could be coming next. Now, according to some estimates, Kohls is the largest and strongest retail chain in the United States. Since about 2019, sales from Kohls have steadily been dropping. I mean, they've been going kind of up and down depending on what's going on with the pandemic, but for the most part, the trend is down. And things really got bad when they had to close the vast majority of their locations due to the pandemic. Because of economic lockdowns and social distancing orders, big box retail stores weren't exactly in the best position. They were forced to close down, which meant that people couldn't go into their stores and buy things. Of course, for a lot of these retailers, they managed to stay open online, and they saw some pretty massive boosts in online sales during that time. But they still had these massive buildings that they were paying for, which kind of led a lot of retailers into debt. We actually saw JCPenney during this time go into bankruptcy. Now for Kohls, this made it bring on a lot of debt because it still had to pay all of its employees and keep a lot of its locations. So it started to get millions of dollars worth of financing. And when things did start to open back up, Kohls got a big wake-up call, as did a lot of other retailers. They wanted to start rebranding and start reinventing their entire business. However, according to shareholders, Kohls hasn't really gone in the direction that they want them to. Kohls is actively doing partnerships with Amazon and Sephora. In fact, they want to have Sephora shops open up in their actual stores all throughout the country. And they've actually started to expand what you can purchase in Kohls locations, adding Nike and Under Armour to their lineup. But even after all of that, Kohls is still struggling, and now they're actually starting to get buyout offers from investors and other businesses. And the reason for this is because Kohls hasn't done the one thing that its shareholders really wants it to step into: expand its e-commerce empire. Consumers and younger generations don't want to go into retail stores anymore. They didn't grow up going to malls, so it doesn't really make sense to try to promote your business to that audience. A lot of shareholders and businesses are urging Kohls and other retailers to exclusively go into e-commerce and pretty much close or limit all of their locations all throughout the country. Brick and mortar stores have slowly been going out of style for a long time now. And I don't know if you've been to a Kohls store, but they're not the smallest locations. They are massive, which means it takes a lot of energy and a lot of employees to run those locations. Not only that, but you actually have to fill them with product. And if you're not selling product in those stores, then you have millions of dollars just lying around. That leads to Kohls and other retailers actually closing those locations, which leads to jobs lost and ultimately less money going into our economy. Now, of course, I kind of see it from Kohl's perspective here. Kohls specifically has been around for a very long time, and the audience that they're trying to target is one that they want in their stores. They want to try to keep that traditional retail experience alive, and to be honest with you, there are still some people in the United States that want to go into retail stores, that actually want to see the clothes and to see the merchandise they're going to buy before they actually purchase it. Overall, that's going away, but for right now, they want to kind of keep that alive because they feel like people still want it. And I think the pandemic really kind of made this situation even worse for retailers like Kohls because now people were forced to shop online. Even people that wanted to go into stores couldn't because the stores were literally closed. And ultimately, retail locations from Sears to JCPenney to now Kohls have been pretty much behind the curve on consumer trends for a long time. To give you kind of a historical example here, let's talk all about malls. Now, malls in the United States were huge because they met that convenience level that Americans were looking for. Before, Americans didn't have a lot of cars and they didn't have a lot of time. So having, say, a family of 4 meant that you had to drive around to a bunch of different stores in order to buy everything that everyone wanted in your family. However, malls kind of fixed that issue because now you had all of these different stores all in one place, and a lot of them had food courts. Not really sure where that went. So you could shop and eat and sometimes then go to the movies all in one place. I mean, they were basically centers for everything that people wanted. And for the United States economy, they were centers for spending. But as time goes on, trends change and Americans want that new level of convenience. Once the internet really became big, well, now people don't want to go out anymore. They want to shop online and have all the products brought to them. That is the next level of convenience. And then we had another big expansion of convenience with Amazon providing 2 and even 1 day shipping. So literally, if I order something from Amazon today, chances are it's going to be here tomorrow. And Amazon is always looking to expand that and literally bring products to you day of. That's huge because now I literally don't even need to leave my home. And to me, this isn't just Americans being lazy. Convenience doesn't mean lazy. Sometimes convenience means efficiency. Americans nowadays are busy. They have a lot of stuff going on and it's hard to go out and shop, and it's hard when you can't get things online because they take weeks to ship. But if you know that Amazon is reliable and it can get you that product you need tomorrow, well, then you're gonna go with Amazon, especially since prices on Amazon are competitive compared to some places like Kohls, who in my opinion upcharges just about everything they sell. You can save money by going to Amazon and you can save time, so there's really no reason not to buy it from Amazon first. That's just Amazon. There are other retailers out there that do the exact same thing. So Kohls and traditional retailers, just as a model, just simply cannot survive the long term. I mean, do I think that Kohls is going to completely go away? Well, not exactly, because I think they eventually are going to see the writing on the wall and are going to slowly start shrinking their business, shrinking their stores and going more online. By that point though, I think it'll be way too late for them to make a massive impact on the market. That may end up leading Kohls to become a private company as they get bought out, and that company doesn't want them to be public anymore. They're gonna have to completely reinvest and recreate their business, which is pretty hard to do when you're a public company because you have so much money coming from individual stockholders. When you're private, you just have money and decisions being made by private investors. It's a smaller pool, which means you can get a lot more done, although it might not be the right thing at that time. Now, what exactly does this mean for the future of shopping in the United States? Well, I think that level of convenience is always going to be expanding. I think that Americans are always going to be looking for the new best thing. Right now, that's Amazon. Before, it was malls. We don't exactly know what the next big thing is going to be. Eventually, Americans might again want to go out to these traditional retail locations. Kohls is kind of betting on that. If that's the case, then Amazon is going to take a hit. However, I think that's pretty far off. I mean, online shopping is so huge right now, and it pretty much dominates all of the shopping in the United States. But could that change in the future? Absolutely. You could see another company actually take over Amazon. Now, it might still be e-commerce, but it might be even faster or better priced e-commerce. We just don't know. But with inflation going up and Americans getting even more busy, online shopping is the clear way to go. And it's going to be very difficult for these traditional retailers to make that shift. But they don't really have a choice. I mean, they could either shift most of their resources to e-commerce, or they could slowly become a dying business. And I'm pretty sure they're gonna take the first one. But now I wanna hear from you on this issue. What do you think about traditional retailers, and more specifically Kohls, pretty much going out of business sometime in the near future? Do you think that companies like Amazon are going to completely take over the shopping space in the United States? Or do you think there's a chance that things actually might revert and people are gonna start going back to traditional retailers again? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.